Hello guys, you are welcome to my YouTube channel, and we are going to discuss or look briefly on how you can scalp gold on the lower time frames for today. But before we do that, we are quickly going to look at what has happened on the higher time frame. We have gold on the daily time frame on the screen, and if you look at what has happened on the daily time frame, you can see that the price of gold is still bullish. We have a low around here, we have a high, okay, and we have a higher low. Then we have a higher high. All right, so it's still bullish. So price can still, it's still bullish means price can still drop to this area and bounce from there, or price can continue up. All right, okay, zooming out, in as much as this low is yet to be broken, the buyers on the daily time frame are still in control. I'm talking about the 1969 area. 1969 area still protected. The buyers are still in charge. All right, so last Friday we had non-farm payroll US data release, and the price of gold dipped for about how many pips? 249, 239, 100 pips, 29, 200 pips, 19, 300 pips, 209, 400 pips. So like 450 pips. Price of gold dipped by 450 pips throughout the last trading day, which was last Friday, and which happened to be the day US non-farm payroll data was released. But for now, the price of gold has retraced almost 50% of Friday's dip. So the bulls are still active. The bears are trying so much to bring the price down. So if you are selling, be cautious. If you are buying, be cautious as well. Look at what happened on Thursday, last Thursday. Price of gold dipped, but the bulls pushed it more than half of the candlestick length. And look at last Friday, they've pushed it to almost half for now, and London session is about to open. London market is about to open. So be cautious. That's what has happened on the daily time frame. We have this order block on the daily time frame around here, which was tested last Friday. You can see the test. So as it has tested it, the next time it's going to drop, it might possibly break this order block. Okay, but only time will tell if it's actually going to come down to that order block next time. So let's look at what's happened on the 4-hour time frame. On the 4-hour time frame, we can see a top, can see another top, and you can see what price has just done. Price dipped, okay, and for now price is retracing on the 4-hour time frame. So we might end up seeing another top there's a possibility that we might see another top around here for price to give us a lower low. We have a high around here, we have a high around here, we have a high around here, then we have a low on the 4-hour time frame, then we have lower high, because this high is higher than this high, this high is lower than this high, so it's called, this high is called lower high. Then we have a lower low on the 4-hour time frame. This very low around here is lower than this very low. So then we might have a lower high on the 4-hour time frame for us to now establish another lower low, and that would be a trend development. So, but this might turn out not to be a lower high and might end up going back up. Okay, for us to have triple top, or it might break it for the trend, for the bullish trend to continue. Okay, so but let's continue to monitor what happens. That's the 4-hour time frame. Let's go to the 1-hour time frame. On the 1-hour time frame, you can see the top, this top. You can see another top. But look at this very long candle. All right, so it's an institutional candle. This is where the banks, the big banks, came in, and it is yet to be filled. All right, so if we have a failure, if this particular area refused to go higher and price dipped, we might have a double bottom for the candle to be eventually filled. Okay, so that's a possibility on the 1-hour time frame. But for now, price is retracing, drawing a trend line. It's a trend line, still is respected, has not been tested. So on the 1-hour time frame, still bearish. Looking at the 30-minute time frame, you can see price since market open, you can see that price has been rising. Price has been rising since market opened, and we have like, I think we have like a triangle. Okay, that's like a triangle. We monitor breakout as London market opens. It's about to open, so monitor breakout. Is price going to break down on the 30-minute time frame for us to sell, to scalp sell, or is price going to break above this high 2024, or is it going to break below this low 2020? So we have like a 40 pip range that we'll monitor. If it goes above the 2024, we'll scalp buy. If it goes below the 2020, we'll scalp sell. So that's what we have on the 30-minute time frame. On the 15-minute time frame, the bulls, though the trend on the 15-minute time frame is still bearish, but the bulls have been active since market open for the day. Okay, so bulls have been active, and we have a high, a low, but this high was not okay, was tested where we have liquidity, where we have double top. There's a cluster of sell stops, there's a cluster of stop loss. whenever we have double top, and we call it, it's going to be a sell stop loss. Sellers are selling and they are placing stop losses at this top, so we call it liquidity zone. And look at what happened. Stop loss, cluster of stop loss was, cleared around here at this point. So that's called liquidity sweep or liquidity grab. Okay, and we can see what price did after clearing the liquidity. Price pushed forward, but for now this trend line is being respected. As you can see, the buyers are trying to push price up. So but only time will tell if it's going to drop. As the new London market is about to open, we'll monitor what will happen. Then let's go to the 5 minutes time frame. You can see like a range happening around here on the 5 minutes time frame. Something possibly a news about to be released. We have liquidity here, we'll have liquidity here, liquidity here, liquidity here. So stop losses are somewhere around here. Stop losses here for the sellers, and there are stop losses here for the buyers. So there are more stop losses here by the sellers. Okay, so on the 5 minutes time frame, you have to monitor a break of this zone and a break of this zone. If it breaks below the zone, you scalp sell. If it breaks above this zone, you scalp buy. If it also breaks above this zone, you scalp buy. So for that is ranging. So drawing the trend line on the 5 minutes time frame, we have something like this, and then we have something like this on the 5 minutes time frame. So a break of this trend line can tell you if it breaks above here, you can scalp buy. If it breaks below around here, you can scalp sell. So the London market is about to open. That's why we're having this range into the session change, this change between the Asian session and the London session. So you can see like an equilibrium on the 5 minutes time frame. So something's about to happen. Wait for the breakout before you enter your scalp trade. Okay, on the 1 minute time frame, still range is the range bottom, and this is the range top. Okay, so just wait for a range breakout before you enter your trade. Okay, that's that. If you are yet to subscribe to the channel, please go ahead and smash the subscribe button. If you are yet to like this video, go ahead and smash the like button. Drop comment below the video, ask question. Also smash the bell button below the video for notification when we release the next video, so that you get to see it. You can also visit our website www.fxfables.com, and we have another website, fxfables.com. You can visit these sites to learn more on how to trade. Till I come your way tomorrow, it's bye for now.